All right, well, welcome everyone to tonight's presentation. Tonight I'm going to lay down the base knowledge for you to be able to read a chart, a stock chart, a commodity chart, an ETF chart in 10 seconds or less. And in fact, once you get good at it, you'll be able to do it even quicker than that. We'll talk about how to avoid crashes. I'll talk about how to look for stocks that have a great potential to go higher, how to manage risk. This is a lot of the core concepts that will make you a better investor, a better trader, and it will set us up for the presentations that I'm going to do on Wednesday and Thursday, which on Wednesday, we'll dive into investing. On Thursday, we'll dive into day and swing trading. And then on Saturday this week, I'm going to show you my indicators that I've created, the tools that I've created, the knowledge that I've created for those of you that want to take it to the next level and become a fairly serious investor, serious trader. I've been teaching people how to do this for over 25 years. I've been trading myself for over 35 years. And what I do today is very similar to what I did 10 years ago, 20 years ago, 25 years ago. The concepts are the same, but I'm always evolving the strategies because the market's always evolving as well. So the core concepts, which you'll learn tonight, are the same today as they were 20 years ago. But how we apply them is different today than it was even just a year ago. And so it's important that I do these events a couple times a year because it's a way for my existing members of Stockscores, my students from the past, to get up to date on what's working best now. And it's also a way for those of you that maybe aren't familiar with what I do to learn about what I do. And I am certain that your time here will be worth it because I will teach you some very valuable, simple techniques to evaluate any stock, any commodity, any currency, doesn't matter what it is. If it has a chart, you'll be able to evaluate it in just seconds using the concepts that I'm talking about. So here is our itinerary for this evening. As I said, we're going to learn simple techniques to analyze any stock quickly. And it's really going to establish the skills that you need so that you can understand the other classes that we're doing this week. And I'll talk about the content of those other classes later in the presentation. I'm going to talk about the characteristics of super hot stocks, those stocks that make big gains in a short time frame. We'll talk about how to avoid big losses, how to do proper risk management. As I said, how to avoid stock market crashes. I've had some questions indicating that some people are concerned about a crash, and I will teach you how to know when to get out of the market. And then I'll talk a little bit about the next steps for you to work toward beating the stock market, whether you just want to manage your investment portfolio for your retirement, or if you have an interest in being a part-time, full-time professional stock trader, making a living from the stock market. And at the end of the video or at the end of the webinar today, I will analyze your stocks. So for those of you that are attending this presentation live, you can ask me your questions about the stocks that you may own or have an interest in, and I'll try to answer as many of those as possible as well. All right, well, let's dive right into it. As I said, this is all about learning some important concepts for you to do well in the market. We're going to talk about these 8 characteristics here. If you can understand these 8 things, and I'm going to teach you each one of these things in turn. If you can understand these 8 things, then you can very quickly evaluate anything that you can get a chart on. Even real estate prices, doesn't matter. All right, and we're going to start with inflection points, and then we'll go through what optimism and pessimism are on a chart, talk about support and resistance, the very important concepts of price volatility and abnormal activity, and trends. And for example, the concept of trend is what you really need to know for when to get out of the market in fear of a potential crash. And we'll talk at the end of this session about gold and silver, which broke their trends today. And I think are markets to avoid after being 2 of the hottest markets in recent months. All right, well, let's dive into some charts. And I'm going to teach you these things that you see on screen. And we're going to look at a daily chart, a 30-minute chart, I believe, or 13-minute chart for swing trading, and a day trader chart. And these concepts work on any time frame chart. So we're going to start with the daily chart. And this is a stock, if you've been reading my weekly email newsletter, and I'll tell you later in the session today how you can get on that weekly email for free. And one of the great benefits of that email is I every Monday send out an email where I pick some stocks. And this is one of the stocks that I picked recently. It's had a great run. It's over now. I wouldn't consider this a stock to buy now, but it's an example of a stock that I picked in recent months that did very well. And it's going to be used as a way to identify some of my strategies for when to buy, when to sell. And what we're going to start with are these important concepts for evaluating a chart. So if we go back to this screen, you'll see that the first point here is inflection points. All right, so we're going to talk about inflection points first. And they are very simply the place where price stops going down and starts going up, or stops going up and starts going down. So we can call inflection points any of the peaks and valleys on the chart. Anywhere you've got sort of a high or a low point, we are going to call an inflection point. So if price is moving down here, it stops going down, starts going up, that is an inflection point low. And then you have price moving up, and then it stops going up and goes down for a few days. We have an inflection point high. These are the building blocks of chart patterns. And so although it seems like a really simple thing to say, okay, well, there's an inflection point. Whoops. There's an inflection point top right here. There's an inflection point low right there. It's really important to understand them because we're going to use these to define the other elements of chart patterns that I had on that list. So on this chart, that's the inflection points. If we go to a chart for a swing trader, same thing, little peaks and valleys. There's a peak there, there's a valley here, there's a peak here, there's a valley, a peak, a valley, a peak, a valley, a valley, a peak, a peak, a peak. You can get them here. Anywhere price stops going up and starts going down, or stops going down and starts going up. Very simple. All right. And I know that seems overly simple, but it's very important to understand this very basic concept because we're going to use these as sort of a connect the dots type approach. We're going to take these inflection points, we're going to draw lines across them or connect them for trends, for optimism, for pessimism, for support, resistance. So it's really important you understand this. So we'll look at one more chart, and this is a day trading chart, the stock that we traded today in my active live service, and I'll talk more about that a little later. But again, you can see that there's a little price peak there and a little valley there and a price peak there, and there's lots of them on here. And I've actually got algorithms that I've created that will automatically draw these on the chart for you if you use a program called TradeStation, which we'll talk more about on Saturday during that webinar. I'll talk about my tools and some of these indicators I've created, but it's not that difficult. If the stock goes up and it stops going up and starts going down, we've got an inflection point high. All right, so now we're going to use those as building blocks. So let's go back to this first chart, and now we're going to talk about optimism and pessimism. It's very simple. If the bottoms, the inflection point bottoms, are rising from left to right, then you have optimism. If the tops are falling and the inflection points are falling like they are there, you have pessimism. And so we could draw that in red for pessimism, and we could draw this in green for optimism. It's that simple. And it's an important concept because when we're trading, we always want to be on the side of the market that is in control. And so if it's an optimistic market, then we want to be on the buy side. If the bottoms are rising, we want to favor buying. If the tops are falling, we want to favor selling. And so we always want to gauge who is in control of the market. It's helpful perhaps to think about the market like a river. You could put a canoe in the river and you have a choice. You can paddle with the current or you can paddle against the current. Obviously, paddling with the current is going to be easier. And so identifying whether there's rising bottoms predominantly or falling tops predominantly is simply a matter of, are there rising bottoms or falling tops, optimism or pessimism? And we go to that inflection point and we just look for whether the inflection points are generally going up or down. And then we can, from that, define the trend. All right. So we're going to come back to just this chart right here. And again, I can see that there is inflection points rising from left to right. And so we had optimism. But within this optimism, notice that we also had a brief period of pessimism. So sometimes you can have shorter periods of pessimism inside longer term optimism. And that's actually some of my greatest strategies, some of my best money making opportunities come in this situation where you've got short term pessimism in longer term optimism. And we'll talk about that on primarily on Thursday when I talk about day and swing trading. I will show you where to buy this stock, and we bought this stock a number of times over the last week and had nice trades on it, doing this exact concept where we're buying breaks of pessimism inside longer term optimism. Now, I don't want to jump ahead too far yet because right now we're just trying to learn how to read charts, but very simply, optimism and pessimism, rising bottoms and falling tops. And so here you can see on this chart, which was a day trader chart, we had very minor optimism building there and then pessimism building there. And there was a great trade on this stock right in here. We'll come back to that in a moment. All right, so next up on our list, we've done optimism and pessimism. We're going to go through support and resistance. So support and resistance are horizontal lines, ceilings and floors that define the market's maximum price that it's willing to pay for the company's fundamentals. And so you can see here that this stock rose very quickly, got to $5, and the market said, based on all the information that we have about this stock, we don't really think it's worth more than $5. The sellers came in at that point and pushed the stock lower and prevented it from getting through 5. And that price level has meaning because it represents the buyer's willingness to pay a certain price and the seller's point where they're really willing to act more aggressively and sell that stock aggressively. So these levels are very important. And so again, you can see that the stock goes up to 5, gets stuck, comes up to 5, gets stuck, and then finally breaks through 5. We call that a breakout, obviously, and we had a nice run out of that. Now, support is a floor price. And so if we were to start drawing again here, and we'll draw support in green, anywhere there's an inflection point low, we can call that support. So we've got little minor areas of support, and then we've got much more substantial areas of support. The longer a floor price holds up, the more important it is. And so right now we've got support in the stock at about $7, and resistance on this stock in the short term is at around 9.5, and then another area of resistance about $11. Now, support and resistance are important because when you get breaks through them, you often get runs to the upside. And so we had a minor area of resistance right here. You can see the stock hit this $2.50 level once, and then came up and hit it again, came up and hit it again, stalled, and then finally broke through there. And then it ran up to the next level of resistance where it got stuck, and it went sideways for 5 or 6 days, and then it broke through and it made another run to the upside. So you can see that when stocks break through resistance like they did here and here, we get nice runs to the upside. And we actually had that back over here as well because we had resistance here and we broke through that resistance and went, in this case, from $1.50 to $5 in 4 days. And so obviously if you're a short-term trader, you can buy a stock at $1.50 and 5 days later sell it at $5. Pretty nice trade. I will teach you how to do that. Now, again, our sessions on Wednesday and Thursday will go into this in a lot more detail, and I'll show you where you can register for those if you are not already registered for those events. All right, so that's support and resistance. Let's get back into our list here and talk about price volatility and abnormal activity. And these two things are far and away the most important concepts that I trade off of. Because what I'm looking for, and I'll explain why in a moment, I'm looking for stocks that go from low volatility, and we had low volatility here, and I'll explain what makes that low volatility in just a second, and then to have abnormal activity. All right, so what is low volatility? Well, anywhere that price is trading in a sideways pattern where the price day after day is not really changing. So you can see here that in this time zone that I've got circled here, the stock was trading around 50 cents, and it wasn't moving up or down a lot from that. It might have been up to 57 cents or down to 44 cents, but it was essentially trading around that price range. And so what that really means is that the buyers and sellers in the market, based on all of the information that they have about this company, they have come to the conclusion that the fundamentals are worth around 50 cents a share. And that's based on all of the information that they have about from news releases, earnings reports, everything that people use to evaluate a company's value. All of that information, the buyers and sellers take that information, they think about it, they analyze it, and they say, okay, we think the stock is worth 50 cents a share. Now, the reason that that's important is because if all of a sudden you break out from that low volatility price range, like we had happen right here, where you break from low volatility with abnormal activity, that is often caused by some new information that comes into the market and justifies people paying more for the stock. So let's say it's a biotech company, and the company's working on a few different treatments for some cancer treatment, let's say. If the market really hasn't identified any success in that treatment, the stock's going to trade kind of around that price range, 50 cents. But let's say in the trials that they do, the testing that they do for that new drug, they find that that drug is actually somewhat effective. When the market learns about that, when the company puts out news or there's rumors in the market, you're going to see the buyers now have a new reason to pay more for the stock. It could be a gold mining company looking for gold. If there's some early indication that they found a new deposit for gold, then the buyers are going to have a reason to come in, jump in, buy the stock aggressively, and that's what creates the abnormal activity. Now, you might be surprised, but I really don't read company news. Not because I don't think it's important, but because I don't really care what the news says. What I care about is what the market thinks of the news. And that's why I watch market activity. That's why I look at charts. But I don't look at charts with the typical technical analysis indicators. I've created my own. I'll show what those indicators are on Saturday during that class. But the indicators are based on this concept of abnormal trading activity. If a stock is all of a sudden trading more volume, making a price jump that is more than normal statistically, and we can create algorithms to gauge that statistical significance of price and volume activity. When that happens, I know that something has got the buyers excited. Usually it's a news release or a rumor or maybe some promotion of the stock by the company. I don't care what it is. I don't care what the news says. What I care about is what people think of it. And here's the reason I don't care. Primarily, it's because I don't know enough about every industry to be an expert. Okay, I'm not an expert on biotech stocks or on gold mining stocks or oil stocks. I'm an expert on trading. And I know that the people that know the most, when they read those news releases, and there's something significant in those news releases, they will act on that information and paint a picture that I can follow. And so when this stock right here started to trade abnormally and make this abnormal break from low volatility and the volume was higher than normal, I don't need to know anything about what was in that news release. I can tell that the buyers are excited about something for a reason. So one of the things I love to do is look for stocks that make an abnormal price break with abnormal volume from low volatility. And I've created special indicators and tools to do that. We'll show some of those tomorrow, some of those on Thursday, and then take a deeper dive into those tools on Saturday. All right, so if we look at the next example here, we've got a stock right here that nobody cares about. It's boring. And then notice right here, the volume starts to come in and the price action becomes abnormal. So that was our first clue that there was something going on with this stock. Now, there was other trading opportunities on the stock using different strategies. I don't always buy stocks when they become abnormal from low volatility. Sometimes I'll do other things and I'll show exactly what those strategies are Wednesday and Thursday. But I just want to highlight how we have this abnormal activity from low volatility. And it really started this upward trend where, on October 9th, the stock was trading under $2 a share. And it hit $6 a share on Monday, yesterday. All right, one more example, and this is a day trading example. This stock was one of the hottest stocks of the day today, and it made a big run in the pre-market. You're only seeing this chart as of 9:30, but what you can notice is that the volume there is much higher than it was yesterday. Here you had low volatility, nobody cares, and now all of a sudden there's some new information coming into the market that justifies people paying a higher price. And then we went into a new little pattern of low volatility and then a break from that for a nice run higher. We'll elaborate on that in just a moment. All right, so those are the main elements. I call these the 6 elements of chart patterns. 1, 2, 3, 4, 5. Whoops, lost my 5 and 6. And then, of course, we have to talk about trend, because trend is very helpful for knowing when to sell a stock. And so when we talk about trend, we do just go back to this concept of rising bottoms. And I can draw a line across those rising bottoms like that and establish a trend line. Okay, there's a much steeper trend line here. There's a little downward trend line there. Just take your inflection point, tops and bottoms. Okay, I'm just identifying all those inflection points. And remember I said it's just a matter of connecting the dots? There you go, I just connected the dots to define a trend line. We had a little downward trend, we had a little upward trend. It's not hard. If you can basically imagine a ruler being pushed up against the bottom of the chart here, just pushing up against that chart, where would it settle? Well, it's going to settle right there. And you'll notice that the trend line was broken at the start of October. This much steeper trend was broken here, but we had the first break of trend right here and then the more substantial break of trend right there, and we see it move lower. Now, I will elaborate on some charts that broke their trend, very important charts that broke their trend at the end of our session tonight. We'll talk about gold and silver, and those groups, which have been in a very strong trend for some time, broke those trends today. So really important sell signal on gold and silver today, and we'll talk about that at the end of the presentation. All right, if we go to this more intermediate term, this is a 13-minute chart going back the last couple of weeks. There's a trend line right there, and then it got steeper and steeper, breaking the very steep trend right there. We also had a little trend line there that got broken, a little downward trend line there that got broken. We use these to know when to buy and sell, and that's why I'm laying these concepts down, because we need to know what trends are, because a lot of my strategies revolve around trends, breaks of trend, abnormal activity, low volatility. Again, these are the things that I've refined over the last 35 years of trading, and we're going to continue to build on these concepts as we go through these 4 classes this week. This is the first class. We're laying down the basics. We're going to elaborate this in relevance to investing tomorrow, and then relative to day and swing trading on Thursday. All right, so we've established now our primary tools to evaluate any chart. And once you understand these things, you can apply it to Tesla's chart, you can apply it to Bitcoin's chart, you can apply it to the price of hockey cards. As long as you can get a chart on anything, you can gauge how price is likely to move in the future based on the pattern that it is in right now. Now, the next thing I want to talk about are what to look for to find hot stocks. As I said earlier, we want to start with this focus on abnormal price gains from low volatility with abnormal volume. We want to find the stocks that surprise the market with strength. We've sort of done this a little bit already, but we don't want to own stocks when they're trading with low volatility. We want to wait till they start to break. All right, so if we go into our charts again, here is low volatility, and here is my abnormal price break. That's the time that it tells me to start looking at this stock. And it had a buy signal there on one of my strategies. There was other buy signals. There was one here, there's one here on different strategies. Now, someone asking, well, how do you know which chart to look at, which time frame to look at? Daily chart, weekly chart, 1-minute chart, daily chart, whatever. The answer to that is you look at the chart that's relevant to the time that you want to trade. So if you're a day trader, you're moving in and out of stocks during the day, you're going to have a much shorter time frame chart to look at than if you are an investor looking to manage your retirement portfolio. Maybe you're doing 20 trades a year, not 10 trades a day. So typically when I'm day trading, I look at 1-minute charts and sometimes as short as a 10-second chart. So 10-second charts and 1-minute charts, primarily when I'm day trading, but I also look a little bit at the 13-minute chart. When I'm swing trading, and by swing trading, I mean being in the stock for anywhere from a couple days to a couple of weeks, very rarely more than a couple of weeks. Swing trading, I'm looking primarily at a 13-minute chart, and my secondary chart is a daily chart. And when I'm investing, position trading, I'm looking primarily at a daily chart, but also at a position trading chart, or sorry, at a weekly chart. So we'll talk about position trading on Wednesday, and we'll talk about day and swing trading on Thursday, and I'll get much more into the detail about those chart timeframes when we do that session. All right, so here is our first chart. Obviously, we have the abnormal price break from low volatility. Let's look at the next one. We had an abnormal price break from low volatility. That touched off this big run higher. And then on the hot stock of today, the day that I'm doing the session on Tuesday here, we had our abnormal activity. It actually started pre-market, and then, in the pre-market, it was sort of trading like this. And then it opened here, and then we had another buy signal this morning on this break from low volatility, sideways trading with an abnormal price break. You can see the volume spike up again. And that led for a move from $8 to $12. That's a 50% move in 15 minutes. And we get stocks like this every day. You have to have tools to find them. You have to know what to look for. And again, I'm going to try to teach you some of those things through the week here. All right, so to find hot stocks, this is very important. Write this down. To find hot stocks, you want to focus on stocks that are trading abnormally. I will tell you that almost every market-beating trend, and by that I mean stocks that go up a lot quickly, every market-beating trend starts with abnormal activity. However, there's always a however, not all abnormal activity leads to market-beating trends. And we qualify it by looking for the pattern before the abnormal activity. So when we go through our session tomorrow, I'll show you those patterns for position trading, which is investing for your retirement portfolio, let's say. And on Thursday, I'll go through those patterns for day trading and swing trading. But the common theme among all the strategies I have is that it all revolves around abnormal activity. Let me explain why. For a stock to beat the market, for a stock to move quickly, it has to have significant fundamental change. It has to have some catalyst that gets the buyers excited to buy. Most stocks, most of the time, are not worth trading because most stocks, most of the time, don't beat the market. They just sort of do their thing. We only want to trade the stocks that are abnormal because that's when there is some significant fundamental event that is going to drive market action to make that stock move much quicker than the market. And when that move is over, and sometimes that move lasts 12 minutes, and sometimes that move lasts 12 months. But when the move is over, we get out, we move on to the next one. So our money is always in the most actively moving type stocks because that's where we get the bang for our buck. I don't really like to sit in what I call parking lots, stocks that aren't doing anything. I want to trade where there's action. Now, the caveat for that is that it's essential to have good risk management because these abnormal stocks, they're going up quickly, they can also go down quickly. And so we have to protect ourselves against that by doing good risk management. So if we dive back into our slides here, next slide, how to avoid big losses. I want you from this day forward, every time you buy a stock, whether it's for a long-term investment or a day trade where you intend to hold for a few minutes, I want you to plan to lose. Now you're probably saying, well, why would I ever plan to lose? The reason is very simple. Trading is not about being right all of the time. Investing is not about being right all of the time. It's all about how much you make when you win versus how much you lose when you lose. And it is really important to limit the size of your losses. All right, if we can be right 70% of the time and make double what we lose when we're right, so in other words, let's say 70% of the time we make $1,000 and 30% of the time we lose $500, after 10 trades, we're making lots of money because 7 out of 10 times on average we make $1,000, that's $7,000. And 3 out of 10 times we lose 500, so we lose 1,500 after 10 trades. Overall, after 10 trades, we've made $55,000. $100. But imagine you're still right 70% of the time. And when you're right, you make $1,000. But when you're wrong, you lose $4,000. You take a big loss. 3 out of 10 times you lose $4,000, and 7 out of 10 times you make $1,000. So you're actually losing, even though you're right 70% of the time. Because you've got poor risk management, you are losing overall. So it's very important to go into every trade with a plan to lose, determine the risk of the trade, and use that to size your position. I'm going to show you this in a moment, and then we'll elaborate on this on our other sessions this week. We want to plan to lose when we get a break of support, whether it's by trend line or a horizontal break of support. We never want to trade against the trend. Never, ever trade against the trend. And we want to be wary of parabolic trends. Now, I talked earlier about gold and silver breaking down today, and if you watched my video on Saturday on the Stockscores YouTube channel, you will know that I was worried about gold and silver because those two commodities were in parabolic trends. And today they broke those parabolic trends. Does that mean we're going to get a sharp correction? Not 100%, but it's very likely they've seen their short-term top. Is it 100% likely? No, nothing in trading is. I would say it's 80% chance that we've seen the short-term top, and gold and silver at best are going to go sideways and could go lower in the days and weeks ahead. I'll elaborate on that when I show those charts at the end of our session tonight. All right, so let's do this now with our examples. And so if we were to, be a buyer of this stock right here, we're going to plan to lose if we go below our last inflection point low. So our little floor price right here is our loss limit. We're entering here at $1.50. We're going to plan to lose at about 75 cents. Now you might say that's a 50% drawdown. That seems like too much, but that's the natural place where this stock has support. Now I have another strategy where we would be a buyer here, and I think that's actually where I featured it in the newsletter, is be a buyer here with support there. So in that case, our entry is around $3 and support is around $2. So that was a 33% potential drawdown. But it doesn't matter what the drawdown percentage is because we're just going to take a smaller position if the drawdown percentage is bigger. Let me explain that. So let's say we're buying at $3 and we're going to plan to lose and sell at $2. That means our risk per share is $1. So if I don't want to lose more than $100 and my risk per share is $1, then I would buy 100 shares. If I'm willing to lose $500, then I'd be willing to trade 500 shares because 500 shares times $1 is $500. You don't need me to pull out a calculator to show you that. That's pretty simple math. All right, so we always size our position based on the risk of the stock and our risk tolerance. What is your tolerance to risk? And it's very important to know this because if you take more risk than you can tolerate, you will make mistakes. You will not take the loss. You will get emotional. You will hang on to a loser and let a small loser turn into a big loser. So you have to never take more risk than you can tolerate. All right, so let's move into some of the other examples. So there was a couple of trades on this one. We had our first one here, entry there, support is there. That's our last inflection point low. Another entry right here, support right there. I'll explain why when we go into day trading on Thursday. And that amount there is our risk. There's another sort of one, wasn't the best, but right in here there was one as well, breaking this downward trend line. Entry here, support here. Support is always going to be at our last inflection point low. So when we buy, we go to the last inflection point low, and that's where support is. And then we give it a little bit of extra wiggle room. Different strategies have different amounts of wiggle room. And those are things that I teach. And I'll talk a little bit about how you can learn the exact detail of my strategy, the specific rules for when to buy, when to sell. I'll talk about that in just a moment. All right, so let's look at one more example. And that was this nerve today. We had an entry right around here, support right there. And then we can gauge how the stock performs in risk reward terms. So if this space right here is our risk, then I can draw, we'll draw it in green here, the reward. So that's one element of reward, 2, 3, 4, 5, 6. It almost got to 7 times risk on this trade. And the exit signal was right about there for about 5 times risk. What that means is if I was willing to lose $1,000 on this trade, in just 12, 15 minutes, it made 5 times risk, or $5,000. So you risk 1,000 to make 5,000. That's a great trade. Even if you risk 1,000 to make 2,000, that's a great trade. But it's important to understand that the risk isn't how much we are buying of the stock. The risk is how much we are willing to lose on the stock. And again, when we get into some strategies on Wednesday and Thursday, we'll get into this in more detail. All right, so that is a basic overview of how to read a chart. Now I want to talk about how to avoid stock market crashes, because I know many of you have concerns about that. And so you should. When we get crashes, it can be a dramatic and emotional time if you have a large portfolio or your retirement is locked up in the market. So it's very simple. If you can understand trends and reversal patterns, you can see these things coming. Crashes do not happen overnight. The fastest crash I ever saw was the COVID crash. And even then, it didn't happen overnight. You started to see it build, slowly it was building, and it gave sell signals long before it showed the major part of the weakness. And I'll show you that in just a moment. So ultimately, we want to trade with the trend in the market. Right now, the trend in the market is up. But when we get one of these trend reversal patterns, which is a break of an upward trend from a falling top, or break of a downward trend from a rising bottom, that's when you want to run for cover and look for an opportunity to buy a downward trend, or look for an opportunity to get out of the market before the major weakness comes. And again, I'll show you this on gold and silver, which did that for us today. All right, so if we look here at the S&P 500, this is a 5-year chart of the S&P 500. This is a weekly chart. And I just want to show you the big, downward moves where you really wouldn't want to have been in the market. We had, of course, this one right here, which is 2022 when interest rates started to go up. We had the sort of tariff crash right there. And that's about it. Now, if we went back farther, we could see the COVID crash. In fact, I can jump into the Stockscores website and we'll just pull up the S&P 500 and go back even farther here. Let's go max distance. You can see the COVID crash right there. And, this little crash we had in March hardly even looks like anything. This is a monthly chart going back a long way. We had the financial crisis right here, the tech bubble right there. That was 3 years of a downward trending market. Sorry, I think this was the COVID crash. This was the rising interest rate crash. So COVID crash, rising interest rate crash, and then our little tariff crash earlier this year. All right, you can make money from these things. Just because the market goes down, don't think that there's not an opportunity to make money. And I did a video on that on Sunday, how to profit from a stock market crash. You can go to the Stockscores YouTube channel and see that, but I'll just sort of summarize it. When we see a break of trend, either from a multi-top or a falling top. So here, for example, we had a break of trend, and we then built a falling top and then broke down from a falling top, and that led to this more substantial sell-off. So we want to look for breaks of trend, ideally from a falling top. Now, right now, we had a little bit of weakness 3 weeks ago, but we didn't really break the trend line. So if you were watching my weekly video, you'll know that I knocked my short-term rating on the market down to neutral from bullish. But it's kind of recovered pretty good. So I think we might go back to bullish soon on both the long and short-term time frame. But we want to be out of the market when we break that long-term upward trend line. Okay, we haven't had that happen yet, but it could happen. We always watch for it. When that happens, there's an opportunity to profit by using inverse ETFs. So we're going to dive into this little zone here. This was essentially February, March of 2025. So that's what this chart is. And notice right up here, I've got this symbol, SDS. SDS is one of the inverse exchange traded funds that will go up when the market goes down. And so during that period of February and March, you can see here the dates along the bottom, starting around the 3rd week of February, we started to see this moving up, building optimism. So the things that I taught you about, we had this optimism building, we had resistance right here, and then we had a breakout through resistance from low volatility, from optimism, and that started a nice little move that lasted a couple of weeks. As the market was going lower, this exchange traded fund was going higher. So this is one of the ways that you can capitalize on a downward moving market, because this goes up when the market goes down. And notice that the trend line was broken right here. That's your sell signal to get out of that trade. And you can see that from there, it went lower. So just the same concepts that I talked about at the top of the video: support, resistance, optimism, pessimism, price trends, abnormal activity, low volatility. You take all of those concepts, and if you can understand them really well and apply them to market charts, apply them to commodity charts, to crypto charts, whatever you want, you can know when to be out of a market and when to be in a market using these simple techniques. All right, so let's continue along there. Now, I've been talking about these other sessions that I'm doing through the week, and I know many of you are already registered for these, but if you are not, tomorrow we're going to do a session on investing. So how to create wealth, how to retire early. It's not day trading, it's not swing trading. It takes 5 minutes a day, 10 minutes a day, maybe 15 minutes on the weekend if you want to do it that way. It's not very time intensive. And I will show you the tools that I've created, the strategies I've created for investing. On Thursday, we are going to talk about day trading and swing trading. So we're going to take the skills we learned tonight. We're going to apply them to much shorter term trading, where I will show you how to capitalize on stocks that move sometimes 100%, 200% in a single day. There's stocks like that just about every day, and I'll show you how to take advantage of that on Thursday. And then if you want to learn about my tools, the strategies I've created, the education products that we have available so that you can do better in the market, whether you want to be an investor or a trader. On Saturday, it says there 6 p.m. Pacific. That should be 9. I forgot to change this. So that's 9 a.m. Pacific on Saturday. I will walk you through our tools. So to register for those sessions, simply go to Stockscores.com to the homepage and scroll down the page a bit where you see upcoming events, and there's your links right there. While you are there, if you are not already registered for my free weekly email, where I pick stocks, where I teach a little bit about the market, just click on the See More link and you can register for that as well. I don't send out a bunch of spam garbage. I just send you an email every Monday, typically, with my analysis of the markets and some stock picks for you to go through. All right, so I'm going to talk now about the Stockscores Education Center. This is where I have put up videos and written lessons to teach my strategies, to teach the things that I've talked about tonight, but on a much deeper level. And so if you want to learn about that stuff, that's something that you can purchase access to. And we'll get more into that on Saturday. I'll just give you a quick overview for now. The Education Center has 3 primary areas. The foundation area is where you learn theory. Theory is what we've been doing tonight, and we go into that in more depth. I'll show you this in just a moment. And then we have investor strategies and active trader strategies. So let's jump into the Stockscores website again. Go to Trader Training, and we're going to go to Education Center. And if I scroll down the screen, I can see the foundation section. So for example, the 6 elements of chart patterns. That's what we did tonight. All right, so this lesson has a written component, and I can see all the things. There's inflection points, the exact thing that we talked about this evening. And there is a video here. If I click on the video icon, I can start this video. It's a 30-minute video. It's got some snazzy music. And you can, hear there's support. There I'm talking about inflection points in a video. So it's online classes to help you understand all this stuff. Now that's the foundation area. If you want to learn my investor strategies, there's the strategies for when to buy and sell there. If you want to learn the active trader strategies, they're all there, as well as how to use some of the more advanced tools that we use for active trading. The investor membership at Stockscores gives you access to those foundation lessons, the investor strategies, the Stockscores market scans. I haven't shown the market scan tool yet. We're going to do that a little bit tomorrow and then again on Saturday. So stick around for that this week. You get email support from me. You get access to our tools. The active trader membership, I'm going through this very quickly because we're going to go into this a lot more detailed on Saturday, what these all encompass. But I just want to give you a broad stroke here. So the active trader membership includes everything in the investor course material, but also the active trader strategies. It makes you eligible for a service we have called Active Live, which we run every day for day and swing trading signals. Stockscores Active Live is where you watch my screen monitoring the market for day trades and swing trades. It's real time. It's a live webinar that runs every day, all day long, well, all market hours long. And automated instant trade signals. We've built these, very sophisticated algorithms that are scanning the market in real time, looking for those stocks that come alive with abnormal activity. I'm doing the work for you to help you find the trades. Well, my computers are doing the work, I should say. And then we're identifying those signals. And I watch the same screen that you guys watch looking for the signals. But this service is only available to Stockscores active trader members. So just a quick sort of email that I got, with someone who had great success with this. And while I'm showing this, what I'm going to do is put up a poll here, because if you have any interest in wanting to get an update on some of these upcoming classes that I'm doing, I will send you this. And so you should see on your screen now this poll. I don't like to bug people with a bunch of marketing stuff, so I just won't do that. If you want me to send you an email with some information about the courses that I'm running in November, it starts right at the start of the month in November, just say yes to which one you're interested in, and I will send you a lesson on that. So if you want to do the more investor focus, that's the one you want to click yes to. Day trading and swing trading is active trader. Now the mentorship is for a very limited number of students. I've got maybe, I think, 4 or 5 spots left for this run that we're doing starting early in November. That's where I walk you through all the material. We do 12 one-hour classes over the course of 6 weeks. So if you want me to hold your hand through the learning process, then that's what the mentorship is all about. It's primarily focused on active trading, but I teach investing in it as well. I think it's more, suitable for someone that wants to make a real career out of trading and that sort of thing. So that is what mentorship is all about. I'll take this poll down in just a second, and then I'm going to talk about some of the ways that you can learn more from me. Some of them are free, some of them are paid. Let me take down the poll here. Thanks for answering that, and I'll be sending out emails on the weekend with more information on the courses. All right. So how can I help you? How can you learn more? Well, I really encourage everyone to make sure you're subscribed to the Stockscores YouTube channel, because I put up at least one video every week, sometimes more. That's free. You're going to learn a lot from that. The free webinars this week are a great place to get started. 4 hours of free education. We did our session tonight on the basics. Tomorrow we'll do investing. Thursday we will do day trading and swing trading. And then on Saturday, talk about the courses, the memberships that I have, the support. I'm the only teacher. I don't teach a lot of people every year. I teach a small number, and you will learn directly from me. I've got 35 years of experience, 25 years of teaching experience, and I've taught thousands of people around the world my approach to the market. You'll get access to Active Live and the Stockscores market scan tools if you decide you want to be a member. These tools are very powerful. They will help you make money in the market. They will give you an edge over other traders, because we find things before most people do with these tools. We've already done the poll, so let's just talk about the live training that I have coming up in November. So at any time you want, you can do the online training, but in November, I complement the online trading with some live classes. So anyone that registers for one of these courses, either the investor or active trader course or the mentorship course, prior to October 31st, so Halloween night, which is Friday next week, anyone who registers prior to that is going to get these classes for free included. If you are an active trader member, you will also get a free month of our Active Live service. Now, all of these classes, which start November 3rd, Monday, November 3rd, 6 o'clock p.m. Pacific time, so much like tonight, they're all recorded. So I know I have students that, or people that may be here even, that are in Europe or Asia. If you can't make the 6 o'clock p.m. Pacific time, all of these classes will be recorded, so you can watch them as a recording. Then if you have any questions, you can email me your questions. The special offer that we have running at this time is you will get these classes for free. Anyone that registers for these courses before Friday, October 31st at 11 p.m. Pacific time will get these classes for free. In addition, there is a discount code right here. So these discount codes, everyone should write these down or take a little picture of the screen here, because these discount codes will get you $500 off the regular price. So the investor course is $29.95 less $500, so it's going to be $24.95. This is Canadian dollars. I know we have a number of people here in the US or Europe, and so Canadian dollar is obviously worth less than the US and euro, and so it's cheaper for you guys. You can take about a little better than a third off in your own currency. So investor course, $29.95 less $500, so $24.95. Active trader with the discount is $34.95. Mentorship will be $54.95. And again, we only have 4 or 5 spots left for that. So if you want to do the mentorship, you might want to jump on it sooner than later, because we only take 15 students for that, and we're pretty close to full. The mentorship includes active trader. The active trader includes investor. So you don't have to do the investor and the active trader, because every higher level includes the levels below. Now, if you took the investor course a year ago and you'd like to upgrade to the active trader course, you can do that. It's $1,250. If you took the active trader course 2 years ago and you want to do the mentorship now, the upgrade for that is $2,000. And so you can email me if you have an interest in doing those upgrades, and I'll show you how to do that. To register for the course, you can go to that URL. The easier way is just let me show you. So go to the Stockscores website, go to Trader Training, learn how to trade, and this page right here has all the information on the courses. So there's the active trader course, here's the investor course, there's a little video that describes each one. If you want to purchase it, you just click Order Active Trader, and then you put in your discount code, click on this little link here, and so I can go 500 ATA 25, apply discount. There, it took the $500 off, and then you just complete the process. All right, we'll go into this in more detail on Saturday, but if anyone wants to get on board with that sooner than later, you can do that. So before we get into some stock questions, and I promised we would look at gold and silver, I'm going to do that in just a moment. Here is my email, or here's another sort of testimonial. I'm going to give you my email address in just a minute. Actually, I don't think I have it on the screen here. My email address is tylerb@stockscores.com. I don't know why I didn't put it on here. Usually I have it. Let me just, I can't really type it on here now. I suppose I can. Let's just go like this, tylerb@stockscores.com. That's my email address. And if you have any questions, you can email me at that address. And I think then we're going to do some questions. There have been lots of questions coming in, and I like to always sort of have a nice flow through the presentation and do questions at the end. So we'll do that now, and I'm also going to look at some charts. To begin, I just want to show you the charts of gold and silver, because here you have this, a few things to look at. First of all, we had this nice sideways trading range, low volatility, abnormal price break, volume jumped up. That was the last buy signal on gold. We went parabolic, and you can see today that we broke that parabolic trend. So we may only pull back to the linear trend. That happens quite often because we are coming from a new high and not a falling top. And that may be all that we get. And if that's the case, then we're probably just going to go sideways here for a while. But if we break this linear trend line in the weeks ahead and start to go down through that, I would be a little more concerned about it. So my feeling is it's probably a good time to be out of gold and silver. Let it settle in. You can always buy it back later. If we go on a 3-year chart of gold, you can see that it went sideways here for a while, broke out, had a nice run, pull back, break, a pullback, another run, sideways trading, breakout. So there's buy signals there, there, there. And we don't really want to be in it here. We don't really want to be in it through this sideways range. I like to own things when they're moving. And right now I think we're likely to do, either a pullback like this, or maybe just go into a sideways range for a while. So that's why I'm not too excited about gold and silver. All right. Now, I've got a lot of questions here. I'm going to do my best to sort of pull some of these out. If I miss your question, you can always email me. Someone asking, do you think the NASDAQ might turn around tomorrow morning and go up after turning down today? Well, let's take a look at the NASDAQ. So QQQ is the symbol. And the NASDAQ wasn't really down sharply today. It did have a bit of a sell-off day a little over a week ago, and that's when I lowered my rating to neutral. But we've actually come back quite nicely. And if we were to dive into this on a 1-month chart, you can see there's that sell-off. We've come back to the highs. I think the NASDAQ looks fine. I see no reason to be a seller yet. I'm always watching. And again, if you're subscribed to the YouTube channel, then I will always let you know when I see a breakdown. But I don't see great cause for concern right now because the upward trend is intact. Do you give your comments on the trend of the markets in your weekly Monday YouTube videos? Yes, I do. And there's actually, the YouTube video comes out on Sunday. The email newsletter comes out on Monday. Is there a possible buy and a pullback for NAUT, abnormal volume today? Let's take a look at NAUT. Nope, it was yesterday. So if we look at the 1-month chart, you had this sideways trading here, breakout. Okay, that's when it first started to trade abnormally. It runs up. So this would be buy point number 1. And buy point number 2 was on the break of the pullback yesterday at $1.10. Now it's too late. It's already gone up to $1.40. If you're in it, still a hold, but I wouldn't chase it here. MP Materials, any thoughts? You got to give me the symbol because I don't know the symbol, but I'm happy to look at any stock you want if you give me the symbol. Someone asking about AMD. AMD, good upward trend. I think a little extended. You know, we have this big gap up here. So that's a little bit worrisome. Let's take a look at this on the 3-year weekly chart. Yeah, it's a hold. I wouldn't buy it here. I think it's risky, but it is a good hold. And what else have we got here? Now lots of questions rolling in, and I won't be able to get them all, but I'll do my best to get some of them. So NVIDIA, let's take a look at NVIDIA. It's a little bit sideways the last little while. I think it's a little toppy. I mean, the long-term trend is up, but you can see here this upward trend line was broken here. And since that time, we've kind of just been going sideways. It's an okay hold. I wouldn't consider it a buy here. You can see we had this upward trend line broken right there. That led to 3 months of weakness. We had this little break here right now. So far, we haven't broken down, just sideways. I think it's an okay hold, but not a great buy. Gosh, one of the problems I have is because there's so many questions rolling in, my screen is scrolling up through them, so I'm not going to get all these. But regarding the mentorship course, will I be able to view the recorded version of it later on? Yep, every class is recorded. You can watch it 100 times if you want. There's no limit to how long or how much you watch it. All right, let's take a look at Canadian stock here. Someone asking about IM Gold, which is a gold stock on Toronto. And you can see there, we talked about trend line breaks, trend line break there. Notice it started to behave a little bit volatile the last week and a half. That told us that people were getting concerned. And then today we broke down. So, you know, you may see it bounce back a little bit in the next few days, but I think it's better to be out of this for now. All right, Eris, I don't know. Eris looks bad. Sellers are in control. You're breaking down a little bit through some support, so don't love that. Is Beyond a buy? No, Beyond was quite abnormal the last couple of days, but it's more of a day trader. And the reason it's moving up into all this pessimism. Remember we talked about pessimism? Falling tops. Okay, so you're moving up into pessimism. It's had this great run, and we were watching it for day trades yesterday and today, but I don't consider it one to be buying for the long term. Let's just take a look at the 3-year chart here. You can see what a dismal performer this has been. It is perhaps going to break this downward trend line, but it's not doing so from a rising bottom. And so I would just only short-term trade this stock right now. V.UCU. And you can pull up charts on Stockscores for free. Just punch in the symbol. So for Canadian stock on the venture, the symbol is, you always put a V in front. You'll see here, I've got a little V right there. So V.UCU. This gave something called a bursting bubble candle right here. When you go parabolic, you hit a new high and close red. That's a sell signal. And so it's now coming back towards the linear trend line. I would stay out of this for now. I think that it's quite volatile. It was a great mover, but I would not be a buyer, and I don't know if I'd be a seller because it does have a little bit of support right here, but you definitely want to be dancing close to the door on this one because it looks a little bit sick. DEFN. What is the best time to take advantage of the free 1 month trading live? Whenever you're ready. You know, there's no time limit. So if you take the course and you want to do your free month of active live 2 months from now, that's, you know, it's all your choice there. So again, people are putting in names of companies. I need the symbol. Don't put in, I mean, I know NVIDIA, but I don't know all the symbols. How to find ETFs? The best way to do it is go to ChatGPT and ask the question, what is the symbol for Canadian ETFs? And they'll give you a list. That's what I do nowadays. ChatGPT is really good for that. I have a question about bull, which has fallen below a lot of support levels recently after Trump's post. What does your trend analysis say? BULL. Ugly. I would not want to be in that. Does not look good. And sorry, I'm always going to give you the honest answer, not sugarcoat it. V.scan. It's starting to perk up a little bit. Let's just take a look at a shorter term chart here. Yeah, I mean, it's starting to get some volume. Needs to maybe move through 34 cents. I wouldn't say it's a great opportunity, but it's got something going on there. If course done a few years ago, is the $300 annual fee still available? Yes, it is. You can email me if you can't find out how, and I'll show you. Can you talk about uranium? I can. Let's just pull up UUU, which is, no, that's not the right one. What is this symbol for the uranium ETF? There's one of them. You can also look at, I'm drawing a blank on the symbols. I get so many symbols in my head, just can't think of it. URA. There you go, uranium. So uranium, look at that. It also broke its upward trend today. It has a longer term trend right here, so it may just fall to that. So it's not terrible because it does have that support there, but you want to be a little cautious. It too went parabolic, ran away from the trend line. When prices run away from trend lines, they usually come back to trend lines, and that's what we're seeing here on uranium. What is T.TSX doing? So this is the Toronto Stock Exchange. We just punch in, oh no, T.TSX, that might be the actual Toronto Exchange. No, the TSX. So T.XIU is the symbol. A little bit choppy up here. You can see that there's been more volatility. We're flirting with the upward trend line. I think you got to be a little bit cautious with the TSX because I've just dove into the 30-day 120-minute chart. And you can see a little top, double top here. If it starts to move through this floor, this is XIU is the symbol. If it starts to move through this floor, I would get a little bit defensive on the Canadian market. All right, I'm going to do one more. What are your thoughts on the ticker symbol Shell as a long-term investment stock for a retirement portfolio? So let's take a look at Shell, S-H-E-L. And by the way, I'll do more stock questions in other webinars. So tomorrow I'll try to do some more. I know there's a lot of people here tonight, so I'm getting a lot of questions. I just can't do them all. But Shell as a long-term investment, it doesn't look bad. It doesn't look very exciting. I think if it starts to move through this ceiling price, 74, it gets a little more interesting. It has rising bottoms, so the buyers are in control. The stock scores are reasonably good. It just doesn't stand out to me as a stock that I would want to run out and buy. But if you're in it, I think it's a good hold. All right, I'm going to wrap it up there. I hope that you have enjoyed our session tonight. If so, you're watching this video, do me a favor and click on the like button. And if you're watching this live, I will get the video up later tonight. I will email you a link. And if you want to be on live, remember we've got sessions Wednesday, Thursday, Saturday. I'll do more stock analysis. We're going to dive deeper into strategies, build on what we talked about tonight. So if you've enjoyed tonight, make sure you're there for Wednesday, Thursday, and Saturday as well. I want to thank you all for joining me. And as always, trade well.